Hey everyone, Mo from ATZ Finance. Welcome back to an ATZ Finance Insight session. Today we're going to be breaking down a case study of one of our recent clients. This was a marketing agency, as always, joined again by Nilesh, our senior broker at ATZ Finance. So let's get straight into this case study. Recently we helped out a client, right, which was a medium-sized marketing agency. They had a studio based out in North London and they were looking to grow, weren't they?
They were.
So part of this growth, they'd seen a new studio they wanted to purchase. I think probably 4 times bigger than their current one. So obviously things are going great, right? They'd got their mortgage together. They've gone ahead and purchased that new studio. Now, when you dealt with them, Nilesh, what were some of the other things that they needed to kind of support that growth?
So they had a small studio which had been running for a number of years, very successfully.
Yep.
But when you scale, what do? Most people think of, I need to save and then buy.
Yep.
I want to buy a new camera. I need to buy some more equipment. Let's save, and then buy that investment, right?
Yep.
But then you missed out the opportunity whilst you're saving.
Yeah, absolutely.
So these guys,
especially in business, sorry, I just want to touch on that as well, right? In business, the opportunity doesn't wait for your savings account to reach where it needs to be, right?
If you need something, you need it today.
Yep.
It's not that client's not going to wait for you to save, buy the camera or buy that piece of equipment and come back tomorrow to do the job.
Yes.
Right. So
absolutely.
now this is where cash flow is key is one thing. And the most important thing is having the right asset for the right job.
Okay.
So a marketing agency has equipment.
Yep.
Some of his equipment was 2 or 3 years old already. Can you continue working with that equipment? Yes. Are you top of your food chain? No. So that's an evolving market. So this client had to have a new set of equipment supplied within their business to keep evolving. Camera technology changes, microphones change, all these kind of stuff changes.
Bigger studio, more equipment.
Bigger
right?
studio, right? So if you're running a studio 4 times the size, you've only got equipment for a quarter. If you're expanding to 4 times, you need 4 times the equipment. This client spent all the money purchasing the unit, which is a great decision to do.
Great, yeah.
Put into investments, books are great. They bought the asset with the deposit, all that kind of jazz to go with.
No money left for the equipment.
There you go, right? So what do? Continue renting a bigger space, or do you take the plunge and back on yourself a little bit?
And just on that as well, I just really want to touch, right? That's really interesting because so the business is growing. They've bought the new asset. They've put all their money into their new asset, right? Their new studio. Now they don't have enough equipment, but the demand, right? They need to do more clients, don't they?
Supply and demand. The demand is there. People want their services, right?
But not enough equipment.
Not enough equipment. They looked at initially renting, saving the cash flow back, but then they won't have an asset to hold it. It's that chicken egg scenario, right?
So what did you do, man? How
So these
did you help
guys,
them?
our advice was go and buy the asset. That's bricks and mortar. That's great, solid investment to do. On the back of it, do a soft asset finance deal. So
Okay.
what is that? It's all the equipment you need to run the business, the fit out costs.
Right.
So we got them a loan to get the fit out done on the
Okay.
business. Because the books are good, they can justify. You can justify the spend and show affordability. The biggest thing, as long as you can demonstrate affordability, that you can pay this back over a 2 or 3 year period, the money's yours, right? So we kitted the shop. We kitted 4 studios out for them.
Oh, wow. You kicked the whole studio out.
4 studios kitted out.
Oh,
for them,
4
right?
studios. Okay.
So they made 4 the equivalent of what they currently had, but replicated 4 times over.
Right.
New equipment, new cameras, new lighting. You know, some of this stuff. These guys spent nearly £250,000
Wow.
in fitting the studio out.
Wow.
So a small studio was one. Now to replicate that 3 times over and renovate the last one. So basically it's a 4 studio fit out. £250,000 investment, scaled it, grew it. Now all he has to worry about is getting the staff in to run it.
Perfect. Okay. So now he just has a monthly finance payment and that pays off all the equipment that's purchased under that agreement.
Under that agreement, the monthly payments come in X, Y, Z. Now all he has to do is service that monthly payment.
Yeah.
But now he's generating 4 times the income.
But the equipment's all there now, isn't it?
Equipment's there, right? Instead of recycling the same equipment, only doing 1 shoot, it's like having 4 apprentices in your business. If you've got 4 people out there door knocking, working for you, you're going to generate 4 times the income.
Okay, so essentially you got the asset finance agreement in place that covered all their equipment for the bigger studio, right? So obviously the monthly payments are going to be slightly higher,
Yep.
but how did that impact the business?
Now, the client was going through a scale phase, so growth was a primary focus on. For this period of time, the growth was the biggest thing. The competitors were scaling and growing, taking larger and larger clients on board. He was missing out on this opportunity there. So his other situation, do I take this plunge, leverage my business a bit more, pay a bit more of a monthly premium on certain aspects, but take the business which is out there already? Because the demand is there, his service is not going to go unnoticed.
Right. And do you know what? That really goes back to what we were talking about, where when the demand comes into the business, it doesn't generally always match up with the cash flow, right? And that's where finance really comes into play, doesn't it?
It's that bridge gap in between. Couldn't that client wait to get this new business come through and then buy the studio, buy the equipment? Yes, but that opportunity is gone. These clients wouldn't have waited for him. If he hasn't got capacity at his studio, why would they wait? You have to work on your client's time.
I mean, we hear it all the time, right? Clients say, okay, do you know what? I'll wait 2-3 years. We'll get this later. We'll save up towards it. But, the business doesn't wait, does it?
Business never waits. That client who needs to be serviced, whether it's coming to us or going to this studio to go with it, they're going to place it somewhere. If they want it, they want it. That's it. If someone's helping or making a decision, all we can do is support me in the process.
Yeah.
And that's the benefit of working with a broker. We'll support you in that process.
Absolutely. And I just want to touch a bit on, the actual asset itself, right? So the asset in this case we're talking about is all the camera equipment and the fit out that's been financed. Now, why don't you talk a bit about what that compares to and how, the assets themselves generate money over time?
So a camera, for example, take camera example.
Yeah.
We use that as the most simplistic form. Camera and lighting setup could cost you £5,000. Could the client rent it from somewhere else? Yes. Which is equivalent to a monthly payment on him purchasing himself. But when he's doing a video shoot, that camera's now working for you. It's like an employee. So in a digital marketplace, a camera and lighting are your employees right now. So yes, you are paying them a salary, but they're generating you an income as well.
Okay.
So an average shoot could be £1,000 a shoot.
Right.
But without that equipment, that shoot wouldn't happen, would it?
So that £100,000 worth of equipment might be generating them an additional £5,000 to £10,000 a month, right?
Comfortably.
Yeah.
Because it's got to be leveraged up to a point.
And as long as that's more than the finance they're paying out, they're in the plus, right?
Perfectly fine. It's like when you have an employee for your business. You don't pay your employee £30,000 up front day one, do you?
No, this is a good example. I love when you bring this one up. Go on.
So you pay your employee like a plumbing trade. It's a simple example. You've got a plumber on the trade or someone on the tools. You don't pay them £36,000 up front day one. You pay them £3,000 a month, right? But that guy can go out to market and generate you £5,000 to £7,000 worth of work because his day rate is what his day rate is. So he's making you 7, but you're paying him 3, but he's still making 4 in simple numbers. And the camera equipment is literally your employee.
Interesting. I think that's a really good way to look at it.
If your camera is there filming, yes, you paid £1,000 to buy this equipment or £2,000, but it's generating you 5 or 6 sessions a month.
So look, on this case, right, I know that this was a case that you worked on yourself quite a lot. I remember that you went out to meet the clients at the old property and also the new property. Talk us a bit through about how, the service helped.
So the way this particular case worked, yes, we went to see the clients. You have a bunch of the 2 young guys in their under 30s doing really, really well. They've come from a family of entrepreneurs and businesses. Father had multiple businesses in the background, portfolios, a few bits and pieces to go with it. Conversation bouncing back and forth. I'll speak to the clients will speak to his dad. Dad would have his opinion, come back to the son will come back to me. It's like we're playing this little domino effect. Like it's all back and forth, table tennis kind of
Politics,
stuff.
is it?
Literally one of those ones.
Okay.
Father has his opinion. And he just made the logical position where the father said, why don't you come round to the house one evening?
Oh, you went around to the house?
Went to the house. So on a Friday night, 8 o'clock in the evening.
Wow.
On a Friday. Let's have a conversation, work it all, just get to know each other a bit better. And that was what we do really, really well. Went there, understood the requirements of the family, what they wanted to do. The father has his way, has his book of contacts. The son reached out, or the 2 brothers reached out to build their own contacts, right? In business, people who inherit something or grow something further, right? If they replicate what the previous generation did, they won't scale it because they're always relying on someone's hand-me-downs or growth process to go with it. Son took the initiative, or my clients took the initiative to make their own and see what's out there. A modern way of looking at evolution is the best way.
What a decision, I might add, what a great decision.
No, evolution is key. If you look at any sector we worked in the past, you can't do what you did 5 years ago. It just doesn't work today. You have to evolve, you have to evolve, you have to evolve. So yes, the father had his strategy. That worked for him 10, 15, 20, 30 years ago. That strategy doesn't work today. In a digital world where things are done differently, we have to look at where the market's moving. So the client reached out, we sat down at home, had a conversation, just get an understanding what they wanted to do. And it was great. You push back, you accept a few things, and you push new boundaries to go with it as well. And you educate, and this is the difference, you educate the client in what's out there.
Absolutely.
Father had this mindset of you save, you buy, you use. Don't leverage. He leveraged property really well, but he didn't believe in leveraging other things really
well. Interesting. So he actually done the same thing in property, but he's advising against it on this occasion.
No, but he didn't understand it.
Okay.
I think the difference
he didn't understand it.
I don't think he advised against it. He was supportive,
Yeah.
but didn't understand it.
Right. Interesting.
Like he goes, why buy a camera on finance and pay interest when you can just buy it outright? But then my client's like, but I need 4 of them. I've got enough money to buy 1. I haven't got enough money to buy 4. Then that's
What do you say, right?
there you go, right?
Yeah.
Then it's like, okay, I want to buy 4. I've got clients to come and fill out all 4 and work back from there. So just educating the client in the process to go with it. Because he was a property guy, he understood point of leverage, right?
Right.
You don't buy your first house mortgage free.
Of course. Yeah,
You put 25% down and you buy 1, 2, 3, 4, and you scale up
I
from
think that's
there,
a really good analogy there.
But then the father understood that concept really well. So that the penny dropped there.
Okay.
Is the best way of describing it. And he's like, okay, I get it now. So instead of paying 100% of one camera, why don't you buy 25% deposit but get 4 of them? So now you've got 4 cameras running for you. And that's where we scaled up the business, got them £250,000 lending on that one to buy the equipment. I say cameras, but there's more to it than that.
Yeah, of
cameras,
course, yeah.
cabling, SD cards, lighting.
Yeah.
All these things are just mental in the costings to go with it, right? Mm-hmm. And the reason why I took the time to understand the client, one, is understand what they need. And then when I'm talking to an underwriter and a lender, we don't just input details into a system and expect an answer. We speak to the underwriters directly or people.
Okay, so you're speaking to the people at the bank that are going to make the decision.
Yeah, these are not just necessarily banks, but private investors or private lenders
yeah.
who specialize in this marketplace. So you don't go to the bank to get these kind of asset finance. You find a specialist lender who specializes in soft assets, because these are what they're called, soft assets. Something hard is like with wheels on it, your van, your car, your business equipment, trucks. That's a hard asset. Something as soft as this, which is technically not a tangible asset, it can disappear very quickly, right? Certain lenders are very skeptical. But once you understand what the business was and the business plan behind it, the lenders got on board.
Amazing. Okay, so that's really interesting. So what you did is you went out, met the clients personally in the family home, understood the case more in depth, and that really empowered you to be able to speak to the decision makers in the banks or the private lenders, right? And to be able to get that case put through.
Definitely, because the story has to make sense. Because if the client doesn't give me the right information, I can't support them. So this is where transparency is key.
Amazing. So would you say that a lot of lending doesn't go through because there's like a loss of translation, where maybe the lender doesn't understand the client's requirements?
And vice versa. If this transaction was done on a digital format, i.e. fill out a form, do this is what you need to come back to me, and this deal wouldn't have gone through.
Really?
This wouldn't have gone through. No. One, the client didn't know how to present the information. 2, I wouldn't have understood it correctly and what they're looking to scale and grow, where the new client base is looking like. So there's projection, and the client took the time to do the cash flow projections to go with it. By doing this investment, they're going to make this much extra cash flow over here. These are the new clients they're tendering for, and they've got contracts in place already, but they need the studio to make it work.
Interesting. So not only was our service exceptional in this case, right?
100%.
It was really what made that decision easier to make for the lender, isn't it?
All about product placement.
Wow.
It's taking the time to understand what the client wanted, not just saying this is the product you need.
And this is absolutely crucial when you're talking about like £250,000, right?
Definitely. For them, it's just game changer. And now they're just thriving and growing. Unbelievable.